666% gains overnight. And if you just follow the money, these are the type of returns that we can find all the time. And the reason why is because someone always has loose lips. So what we're taking a look here at our 2 tweets. Now, for the last 15 years, I've been doing this on Twitter and publishing this type of information, again, ahead of the news, seeing this type of positioning and then big returns after it. So this is another real-time, real example, real big gains. So what first picked me up is our system picked up this positioning in these contracts. And it's always interesting on a Friday, seeing this type of activity and looking at that type of buying into a weekend. Now, I wasn't quite sure exactly what they're playing for. A lot of speculative buying has been happening in the options market, but at the end of the day, we saw a very large accumulation of these calls traded. That was the reason for the second tweet, because I thought the first time maybe a news rumor would go around on the news wires and we could see prices kind of spike higher here. That wasn't really the case, and this reminds me exactly of Fitbit that I flagged again in October or September, October, when that deal was announced, and we saw positioning with buying calls and selling a call, or buying a call, selling a higher call for the call spread, and the deal was taken out at about $7 per share. So this is another example here. So let's take a look here at the chart of exactly what I'm looking at here. So on Friday, we have the close here. We have a pretty decent candle. This is a $5.62 stock. This is the reason why we focus on these kind of under the radar names, because these are the ones who are getting acquired or would get acquired. We see this positioning here on a Friday, and then all of a sudden $8.67 closes at $8.67 today. Price is up about 48% on the day. Take a look here at what I was looking at and what we got flagged on. This was Friday's activity, and a lot of activity here at the end of the day. 26,000 contracts traded in that August 21 7.5 call strike. 26,000 contracts. When I first picked it up, they were buying at 15 cents, and they came back again, they were buying at 20 cents. And then we see, this is a good example of what we want to see. We want to see spillage. I call this spillage. We see the spillage or the effect happening in other strikes. When buyers are coming in, they're not just coming in at one strike, they're coming in many strikes and also many expirations. So here again, they're coming here at the 750 strike in September, but the bulk of the activity, the most interesting positioning was the August 7.5 calls. Again, buying those at 15, 20 cents. And then we come into today's activity, and those calls close at 115 by 120. So this is the exact reason why we want to follow this activity. And the reason why this spiked higher was because a deal was announced that Tencent was buying the company. A bid, Tencent was making a bid for this company, and this is the reason why we see shares up 50%. Now, shares are up 50%, but those calls are up 666%. This is why we follow the money, and this is how you make those big returns.